Hey everyone, thank you for tuning in to Real Inspection Services. This is your host, Chuck Ryan, here to discuss all things regarding your home and the home inspection industry. Hey, welcome to Real Inspection Services. I'm your host. Today I have a special guest, Larry Steinway from New American Funding. And Larry, why don't you tell us a little bit about yourself, how you got started in the funding industry?
Okay, well, thank you, Chuck. I appreciate that. And yes, I'm Larry Steinway. I'm the Vice President and Area Sales Manager for New American Funding in the Chicagoland area. I've been in the business for 30 years. I got started in the business way back when with my mother was in real estate in Northbrook, where we're filming this podcast. She was a real estate agent, and my sister was a processor for a broker. I was looking to find a great career, and it just kind of organically led me there. I spent many years at a small brokerage, and then one of the largest companies in the United States. I had a part in the growth in that company. And then New American Funding just recently acquired a company called Draper and Kramer. They bought them. They were doing about $500 million a year. And a friend of mine and a former colleague, he reached out to me and said, "Hey, I would love for you to come help me grow out Chicagoland." And so I've been really heavily focused on not only my own production and my customer base, but also in the development of the Chicagoland market for New American Funding. And we're having good success. We're hiring great people. It's a down market for mortgages still because the interest rates are just starting to come down, but we're growing. My understanding is we are one of the top 2 fastest growing independent mortgage corporations in the United States.
So you had mentioned about that the interest rates are starting to come down a little bit.
Yes.
One of the things that I've read is for every percentage drop of the interest rates, let's just say they drop 1%.
Yes.
That 5 more million people will come into the market for buying homes. If they drop 2%, 10 million more people will come into the market for buying homes. And with those drops in rates and with the inventory that we have now, do you see that being a problem moving forward?
Yeah, well, the problem is inventory. That's the problem.
Correct.
There is a tremendous pent-up demand. There's a couple things that have happened, as we all know. One of the significant issues is that we are experiencing the term rate lock is applying to the market. What do I mean by that is that so many people during the pandemic, they refinanced to mortgages 2%, 2.5%, 3%. If I'm sitting on a mortgage with 2.5%, it's pretty tough to think about getting a mortgage at 7.25%. Right now in the United States, there's about 1 million homes for sale. Think about that. There's 350 million people in the United States. There's only 1 million homes available for sale. And maybe of that million, and these are just kind of loose stats, but
no, I get it.
Yeah, but about 300,000 of those million are under contract. So when you really get to it, there's only 700,000 homes available in the United States for sale. The big problem is inventory, and what I think is going to cause a little bit of a tsunami, which we're forecasting, is that when rates do start to get under 6%, okay, even a rate of 6% is going to really start revving up the market. We feel that when you get a 5 in front of that rate, those people that had that 3% mortgage, well, something has happened. They've had a tremendous amount of appreciation in value that they're going to maybe loosen up a little bit. We're going to see some more inventory because of the lower rates. Mm-hmm. It's going to be a bit of a feeding frenzy, but it's also going to increase the upward pressure on the value because people are going to want to get out there and buy homes. So I think we're really bracing for a hurricane, a real estate hurricane. And is it going to happen in the next 6 months? Doubtful. The plan for the Fed to cut rates is kind of all over the place.
It's been all over the place for a while now.
2.5
Yeah, I mean,
years,
they always
right?
kept saying that we're going to have like at least 3 or 4 rate cuts up to this point right now that we're speaking.
And then they don't happen.
And then they don't happen,
That's true. I think everyone is really counting on a 0.25% rate cut in September, okay? And I get calls from customers. They say, "Hey, Larry, I'm going to hold off on buying a home because the Fed's going to cut rates in September, and then I'm going to get a lower interest rate. Well, us mortgage folks, we kind of roll our eyes at that, and I'll tell you why. If you were managing a portfolio for a mortgage company, for example, we have a servicing portfolio in New American Funding of $70 billion. The concept is, and not to appear condescending to the consumer, but do you think that they're managing $70 billion and they're not already knowing what's going to happen in September? That's already factored into today's interest rates. Mm-hmm. There's not going to be this epiphany where they wake up all of the people who price mortgage interest rates mm-hmm. at the lenders and banks. They're not going to wake up at the Fed meeting and say, they dropped a quarter. Oh gosh, what a surprise. Mm-hmm. That's already factored in. And that's why we're seeing rates mid sixes a little bit. If you have every scenario is different. If you're buying a condo with a very little bit down, you're going to be in the upper sixes, low sevens, depending upon your credit score. If you're putting 50% down, you could be in the mid sixes. These interest rates are already counting on that Fed rate cut of 0.25%. Some people think there might be a 0.5% rate cut. There's a small percentage. I don't think that's going to happen. Most people don't. You could go on to things like Goldman Sachs, Morgan Stanley, Bloomberg, and they actually have numerators that show what their forecast is, what percentage they think they're going to make that drop.
So right now, it's kind of like we're in an unbalanced market.
I would say so. A normal market, believe it or not, needs about 5 million homes for sale. 5.5 million. Recently, a study came out by Moody's Analytics, which is a very well-respected firm for analytics, and a lot of bond traders mm-hmm. and hedge fund managers use their data, mm-hmm. and they don't think that we're going to have enough inventory to balance the market out till 2029. So think about that. That's 5 years. Yeah. We're way behind on inventory. We have 1 million homes now. We need 5.5, maybe even 6 million to make a normalized market of inventory.
Part of that obviously has been due to the interest rates going
I would
up,
say the majority of
cost of living, right?
Yep.
Yep. I don't know if, right now when this is being recorded, maybe in a year now, but, are we at a recession right now? Are we ahead of a recession?
Well, as in regards to the recession, we're not in a recession right now. The Bank of America came out with a statement today, their chief economist, and he said that he thinks we're going to have a soft landing when it comes to whether we're going to have a recession. Mm-hmm. Okay. Now that's one person's opinion, but obviously someone who's controlling a significant amount of assets and has the education and credibility to make those comments. It really is, again, hard to determine. Inflation is still there. We did see the jobs report just recently mm-hmm. where unemployment ticked up to 4.3%. Mm-hmm. Okay. Now that's still really low. Mm-hmm. Okay. And the question that you, to the second half of that, where you asked about, is it because of the low interest rates? Well, yes, the pandemic caused artificially low interest rates. The government infusion of, I think it was almost $6 trillion, okay?
Yeah.
Think about that. $6 trillion was infused into buying bonds, mortgage-backed securities, so that they would be able to drive interest rates way down. As loan officers, we certainly benefited from it, but now we're starting to see the impact of all of that with people, that gridlock. And again, pent-up demand is rising, but we're also seeing credit card debt is heavily on the rise. There's a gauge, a measurement of are people carrying monthly credit card debt over from month to month and not paying it off. Mm-hmm. That is actually spiked a little bit as of late. Now, I also spoke to someone that does a lot of insurance, homeowners insurance for me. Mm-hmm. And I talked to him just the other day. I said, how are things going? He's a very successful insurance agent. There's thousands of policies. I said, how's it going? He says, well, the housing's down, but what I'm really starting to see is the cancellation of policies for the toys, the wave runners, the third car, the Porsche, the second home is being sold. He's starting to see that upper bracket of individuals that are now starting to sell off their toys and not renew their policies. Mm-hmm. And to him, that's an early indicator of a shift in, hey, those are kind of what starts to make you think, are we heading into a recession when people start to pull back like that? Mm-hmm. And I find just a conversation like that as impactful to me as it is reading what the Bank of America economist said.
You know, it's funny you should say that, and it's kind of sad in a way, is that I've noticed, because my office is a traveling office, right? So when we go to an inspection, we're going to multiple different properties. And one of the things that I have noticed more is when I'm driving, I'm seeing a lot of motorcycles that are for sale in front of these homes, and they're nice homes, and it's just gorgeous. And by you saying that, I just thought to myself, maybe it was something where, the husband had a midlife crisis and the wife's like, get that out of my house. But now that you had said that, yeah, that makes sense.
Those are the unloading of the toys.
Yes.
That's exactly it. It ties right in to what he said, and getting rid of the pontoon boat. It's all starting to happen. But again, there's no crystal ball. I do think that there's geopolitical tension, okay, mm-hmm. where you take a look at what's going on in the Middle East, okay? We're having, are we going to war? Are we not going to war? You hear of our government sending more military capabilities to the Mediterranean, or, those areas there. And, people don't make big life decisions when there's uncertainty.
Yes.
And we're seeing uncertainty in that region, and it does affect us. We're also in an election year, and each one of those administrations has a cause and effect.
Correct.
And that cause and effect breeds uncertainty. And uncertainty means, maybe we better wait and see if we're going to get higher taxes? Are we going to get lower taxes? Is my family going to lose their business, their job, or not? Certain things. One administration, their policies might, they say, create inflation. Another one might create more taxation. So it's really a Rubik's Cube, and that I think is also causing a pullback. You think of these headwinds. You got the geopolitical, the Middle East issues. There's also other areas in the world that are causing tensions. Taiwan, China, these things could affect us. So you have political issues, mm-hmm. geopolitical issues, still have inflationary pressures, unemployment's a bit on the rise, and interest rates just haven't come down, and inventory is still egregiously low.
Correct.
You put all these things together, and it certainly doesn't help the market to become robust and buoyant.
It's not enticing. It's not enticing, especially for maybe a first-time home buyer.
It isn't. But here's the kind of I want to flip the coin. Okay,
please.
Here's the positive side. Okay, because we've certainly, if anyone's watching or listening to this at this point, they're ready to find a rusty blade. But we don't want to do that. Okay, and so here's the deal. I think that. This may sound, I don't want this to sound like a sales pitch, but now is actually maybe a great time to buy. And you might say, well, geez, without all you just said, how could it be a good time to buy? Here's really the core to that. There's less competition right now. When rates drop, when the election is settled, when there's resolution in the Middle East, hopefully, or there's some calming, or there's a ceasefire. When all of these things take place, when people just say, let's go, let's get out there,
right,
versus today, right? Okay?
Yep.
Well, what's going to happen when people go out there? There's going to be more competition.
Major competition.
That's it. There's going to be more competition. What happens when there's competition for real estate? It's going to drive the prices up. Okay?
Correct.
And so right now is time to maybe consider going into the fall with all this uncertainty. There's less competition. I will say also that you've heard I don't know if you guys have ever heard the cliche, which is marry the house, date the rate.
Correct.
We hear this all the time. We started saying that in 2022 when rates went up.
I did use that on one of our podcasts. I did share that, yes.
It's certainly a worn and tattered cliche, but it's true. We don't make loans to people who can't afford a rate in the upper sixes or low sevens. That there's guidelines in place that say you don't qualify. So
right.
If someone qualifies and they buy, a couple things is this. Number one, the rates are going to go down and they will have an opportunity to refinance.
Mm-hmm.
Okay. And that seems to be a consensus. It's just the date is when. It could be 6 months, 12 months, 18 months from now. Okay. The other thing is that what people are doing, I think, is by staying in their home. One of the things that we need to know is that 80% of Americans' net worth is held in the equity in their home. So 80% of Americans' net worth is held in the equity in their home. Because let's be honest, sometimes we live in a little bubble in our urban centers, New York, LA, Chicago, and we see people in $3-4 million homes all over the place. So that doesn't represent the majority of Americans.
Right.
That represents 1% or 0.5%.
Right.
And not everyone is sitting on a wealth advisor managed account with millions of dollars in it. Okay. Mm-hmm. A lot of people, 80% of Americans, the net worth is in their home. You have someone who says, well, we're sitting on a 3% mortgage. We're not going to move because our payment's going to go up $1,000 a month. Well, a couple things have happened. Number one, wages have gone up. Mm-hmm. Okay. Maybe not as much as we like, but they have. That individual who's on that 3% mortgage that they got in 2020, 2021, it's now 2024, almost 2025. They've had a tremendous amount of appreciation in their property, right? You're in the real estate appraisal inspection service. You understand
Correct.
That, right?
Yes.
Okay. So when you take the rate of appreciation that these people have made year over year over year, now over year, okay, they've created a tremendous amount of equity. And they're saying to themselves, well, I just want to stay here because we have such a low interest rate. The whole thing when it comes to net worth in the home, okay, think of it this way. If I'm in a home and the value of that home is $300,000, mm-hmm. I'm going to ask you, what do you think the rate of appreciation in a nice neighborhood with a nice home, what rate are we at for rate of appreciation right now? What do you think?
5%?
I think that's a really fair conservative number.
And I think that's what people look at as being conservative when it comes to the market today.
I think it's closer to 7 to 8%.
7 to 8%?
Yeah.
You know,
because of the tightness of the inventory.
Okay. And when you had said that, because of the tightness of the inventory, and when the rates do come down and we do have that flood of people coming back into the market, now the rates for the value of the home has gone up. That person might be squeezed out of that area, right?
Right.
Because if they were in that area and they can get in there now versus when the rates do come down, this, as you had said, is probably not a bad time to get into that area, right?
Well, that's true. And let me tie to a point that I was going to make for you that I think you'll find interesting. What's the goal? We buy a home. Obviously, this point is not for the person who's buying a condo and going to live there for 36 months and then move. This is for that person, that family that has young children and are looking to buy a home in a community, and they want to live there for years and raise their children there. Mm-hmm. Okay, mm-hmm. But they don't want to move from the small townhome or condo or the small little house, and they're just bursting at the seams. They just had a third child. Okay, well. And and then they're saying, well, we can't move because we have just this great interest rate that we got. So let's talk about how we create wealth over time, over 20 years. If I'm 32 years old, I don't want to work till I'm 80. Okay.
Sure.
I want to be able to work, raise my family, sell the home, kids go off the payroll. I hope that happens to me someday, by the way. Okay. Yeah. But they go off the payroll, and now you want to sell your home, and you've got a chunk of money. You can maybe downsize a little bit and pay cash. So that's all created by real estate. Mm-hmm. If you stay in the current home at a rate of appreciation, you just take over 10 years, you take a look at like 5%, let's use that number. That's $15,000, okay, on a $300,000 home. You keep adding that rate of appreciation. I don't know. It might be over 10 years at 5% a year. Could be $100,000, okay? So if you buy a $300,000 home and now it's worth $400,000, maybe in 7 years, 8 years. These are really loose numbers, okay? If you hold on to that home because of the low interest rate, you've made $100,000, okay, in net worth and wealth. Think if you say, well, let's just bite the bullet and buy that long-term play, let's call it even a $600,000 home, okay? Now the rate of appreciation on a $600,000 home at the end of a 7-year period could be $200,000 to $225,000. You've doubled your potential for creating net worth by giving up that 3% mortgage.
Correct.
You see where I went with all? Does that make sense?
To me, it makes sense.
Chart, by the way.
No, to me, it makes sense. It's just, I wonder how much of the average, I don't want to say average home buyer knows that. I guess I did say that, knows that type of information.
They don't.
And I think that's one of the things where there is a huge loophole in our market. It's always, I feel, is to get with a good lender, have them talk to you, tell you what the pros and cons are, and show you like an investor, right? Because you are investing into your home. What is the short term? What is the long term benefit for buying this home? And of course, they have to afford it, right?
Yeah.
Cost of living, etc. Their finances that has to take into consideration for that.
Well,
but I think one of the things that I've seen over doing inspections over the years is that sometimes the buyer is not given the right information. And what I mean by that is they're looking at a home and they say to me, hey, we're at our limit on the cost of this home. So if you find $10,000 or $15,000 of repairs that need to be taken into consideration, the furnace needs to be replaced, the roof, etc., we can't afford that, right? Because now homes are being sold, I hate this term, and it freaking drives me nuts as is. But I understand that as is thing for that first time buyer or even a second time buyer. There's something there that there's a loophole, and they're not being told either the right information, and they're actually coming to us saying this. And I say to myself, you have an agent and you have a lender that can help you with this as well. We can only provide them the information that we see, the physical condition of the property. But the other people that are there to help support them with that decision, I think, and it's not a knock on your industry, it's just somehow there's a failure of communication there.
Well, I hope that some real estate agents are listening to this podcast because there's a couple things that you said there. Number one, the lenders, okay? We as the lenders, we don't see the property.
Right.
We don't view the property. It's really, this speaks to why you need a great real estate agent as a buyer, which is why that NAR settlement has really been a shakeup to the industry. And you mentioned even before that, lenders and agents need to educate buyers, right, on this stuff. Well, if you're a buyer of a home, if you want to buy a home, are you going to call me, the lender, first, or are you going to call the real estate agent first?
Well, I think it can go either way.
Okay.
You want to find out what you're qualified for, so you're going to talk to the lender first, right? And then you interview and you take in, whether it's a friend of the family, you have to go through that process and interview a realtor. That's going to be on your side. I know it's your job to say, hey, this is what you qualify for, Chuck.
Yep.
You exceed this, you're not going to be able to qualify for that $600,000. You have to qualify for a $550,000 mortgage.
Correct.
Right?
Yep.
And even sometimes I know people want to stretch because they want to get into that home. And I guess that's what I was saying. And they say that to us, and it's just like, hey, this is what you have, right?
That's a good point. Yeah. I mean, and I do see people stretching. We do. And I do see these as-is offers. And I see them write offers with no contingencies. I think people have to be careful because people are counting on right now that they're going to sell their home within a week or 2 weeks. So they go and they make a contract on a home, no contingencies, as is, under the assumption that their home's going to sell in 2-3 weeks. And in 6 weeks, they're going to be closing on this house. There is going to come a point where the days on market expand. And you want to be careful that you're not that individual that gave up all your rights, gave your earnest money, and then all of a sudden the market shifted and it went from a huge seller's market to a buyer's market. Mm-hmm. I don't know when that's going to happen. Neither do you.
No.
But I mean, it's probably a couple years off, 2-3 years off. But it is a little scary to see people what they're giving up to win these properties and what they can do. And I think again, I push it back onto the real estate agent community to defend why you need a buyer's agent, and that NAR settlement is really going to impact a lot of people that are going to go rogue, go it alone. They don't want to pay the commission to the agents, and they're going to find themselves behind the 8 ball. I just put out gave to a couple of my agents. I'm about to send it out to all of them. It's a list of 100 things that a buyer's agent does. And when I read this list, I read all of it. It was a vast amount of things that they do about scheduling and inspections and negotiating. And, there's so much that goes into it. So it's kind of interesting.
So I'm going to have you explain to the audience what that NAR agreement was, or that it goes into effect August 17th.
Yeah.
August 17th.
Yeah.
And basically what Larry is saying, and I agree with him 100% on this, if you do not work with a buyer's agent, you will get royally freaking screwed. I can't even say it any clearer than that.
What are you really thinking?
Well, this isn't a family show, but I tend to speak from the heart.
Yeah.
You will get screwed. And it's essential that you find a good buyer's agent to work with. And usually buyer's agents obviously know the seller's agents, so they will work with each other. But if you can just give your point about what that NAR settlement was.
Well, again, I'm not a real estate agent.
No, I get it.
So, but I'll give you kind of like the layman's general idea of it, which is, basically for the last 30 years, since the 80s, I believe it is, somebody would list their home for sale and they would charge, on average, it was 6%. Recent years, it's come down a little bit, but say 6%. And what would happen is another agent would bring their buyer to buy that house, and then the seller's agent would give half the commission to the buyer's agent for bringing a buyer. Okay? Mm-hmm. What happened was there was a landmark lawsuit where someone said, I didn't realize that the person representing me, I was actually paying for indirectly. I think that's the best way to say it. And it went all the way up, bubbled up into the courts, and they ruled correct. The person won the lawsuit. Okay, so they passed a law that the only way a buyer's agent can get paid is if there's an actual written agreement in place, a buyer's agent written agreement. Okay, it has to be in writing. Now, they predetermine either based on a fee or a percentage. So if you want to go buy a house and you have Betty Realtor with you, okay, you have in writing that says, okay, I'm going to pay this agent $5,000. Or they might say, I'm going to pay 2.5% or 3% or 2%, whatever that number is. You establish it before you start shopping. Mm-hmm. That's the law now. Mm-hmm. So that the buyer knows what they're on the hook for financially for that
full
service.
Disclosure.
Full disclosure, totally transparent. In some ways, it kind of makes sense a little bit, but it's definitely a shakeup. I'm still in the camp of you have to have a buyer's agent to buy a house. And obviously, based on your comments, you are too.
Agreed.
But how they get paid now is totally transparent. There's no smoke and mirrors, and it's just right in there. And now we have to build that into the deals. So how is that going to happen? Well, let's say I'm going to get 2%. So if I buy a $500,000 home, that's $10,000 is the commission. Okay. There's ways that now that are getting creative to pay that, right? Okay. You could put on a $500,000 home, if you planned on putting 20% down, that's $100,000. You might now put only $90,000 down and $10,000 to the agent. Or you might make the home purchase price, if we agreed $500, you say, well, please, let's write the contract at $510, and I'm going to give my agent $10,000. Agent gets paid, seller's happy, and it actually helps out a little bit. They finance less. They're actually financing the commission, more into the transaction. So that's really the summation of what this settlement is all about. I think what we're going to see is that buyers are going to say, I'm fine with a lot of the things. I just need the attorney to help me with the contract. Now, I've heard from some agents recently that are experiencing this is that real estate attorneys are not real estate agents. They've been drafting up. I had an agent of mine said somebody went with the attorney, no agent. They were the listing agent. The contract came over completely written up as expected, without any training, items left out, not filled out the correct way. And then what's happening is the listing agent, the agent that's selling the home, has to fix up all the contract. So now what are they doing? They're doing both jobs. So I think we're going to be in for some rocky waters till it all settles down and works its way through.
Yeah, I agree. And again, I'm going to say this again. Find yourself a good buyer's agent.
Or you will be screwed.
You will be screwed. You will be. We've seen it.
We're seeing it.
We're seeing it right now, actually. We've done inspections, and we'll get a call where the deal was canceled because they didn't have a representative there on the buy side. So we've had that. It's gone as far as scheduling. And it's a drag. It really is.
It really is. And we, on the lending side, we deal with it also.
Right.
Hey, where's the earnest money? Oh, we decided we're going to pay them less. We're not going to give them $10,000. We're only giving $7,000. Well, underwriters require, if the contract said this, we need an addendum. Why do we need an addendum? There's all kinds of stuff that goes on, and they can't attend the closing. They didn't tell us. I had one where they're like, oh, we're not going to be there, and I'm like, you're closing tomorrow.
Right.
Like, what do you mean you're not going to be there? Oh, our attorney's going to sign for us.
Yeah.
No, you can't do that. You have to have a power of attorney approved 10 days before. We have to fill it out. You have to get in there. So it's going to be interesting.
All right. So Larry, when you have someone call and they schedule an appointment with you, what are some of the things that a buyer should come to you with? Do you prepare them when you guys meet, or do you say, hey, I need 5 things from you to come to meet with me? Or do you just have a sit down with them first?
Well, it's kind of funny. If anyone's thinking of buying a home, here's one thing I'd recommend. I'll tell you the good, the bad, and the ugly, okay? The ugly, which is kind of mesmerizing to us loan officers, is the call on Saturday at 3 p.m. that says, Larry, we saw a house today and we need to make an offer right away because offers need to be in by 6 p.m. Don't be that person, okay? Did you just wake up on Saturday morning with no financing in place,
right,
and think that today we're going to go buy a house? So here's my thing. If you're thinking of buying a home, if it's on your mind, call your lender, get referred a lender, get a reputable lender, call them and say, hey, we're thinking of buying a home. We're going to go out looking this weekend. We're going to go out next week. Don't wait till the last minute. Get that information in, set up that call, set up that consultation, and go through it. So many people, especially self-employed borrowers, okay, or people who are 1099 contractual, freelance editors, whatever they are, designers, whatever. The self-employed individual should absolutely really be getting in there well in advance. The reason I say that, so many people that are self-employed in their mind think their income is one way and the way it's underwritten is dramatically different. I have people that say all the time, I own my own business. I W-2 myself $220,000 a year. So I make $220,000. There's the W-2. And then we get the tax returns of their business, because that's what you have to do. And there's a W-2. It says paid $220,000. But right below that line is a little thing called expenses. That's what they write off. They write off $140,000. Okay, because they're going to take advantage of being self-employed, which is their right, if they have expenses. And, obviously they're not looking to, fraudulently file a tax return with expenses, but they have a lot of expenses.
Mm-hmm.
Well, you actually now, this is just so general, but you only make $80,000 a year in the eyes of a lender.
Mm-hmm.
So you thought, well, I make $220 a year. I'm going to go buy $700,000 home. I'll qualify, no problem. I have no debt. I got perfect credit. I cannot tell you how many really qualified people, meaning like they absolutely can afford that home, most likely. But the way they write their tax returns, the way they structure their income, the way they write against their business, now they don't qualify for what they thought they did.
So I just wanted to say something when you had said that. Back in the 2000s, let's say 2006, 2007, right before the crash, if you had a heartbeat and you just said exactly what he did, even without your expenses that were deducted, and you said you made $220,000 or $200,000, you qualified for a mortgage. And that was the problem, because when the market tanked, that money that they qualified for, they couldn't pay it because the rates started ticking up and they really got screwed.
That's right.
So
it was called SISA, S-I-S-A.
Yes.
Stated income, stated asset loans.
Yep.
Okay. I don't know what we were thinking.
I don't know either, but I was able to, I qualified for things back then. So yeah.
Well, it just went off of credit history.
It did.
Yeah,
it did.
If you had a good credit score, hate to say it, even if you had a bad credit score. That's
why I was saying if you had a heartbeat or a pulse.
We created our own nightmare.
We did.
And we're paying for it today.
Yep.
And it'll never happen again based on lending standards. We have seen it loosen up a little bit in certain areas, but back then you could get a really low interest rate with those programs. Today you can do those products, believe it or not, they're still out there.
Mm-hmm.
But you pay through the nose for those products.
Sure.
Okay. And you got to put more money down. It's a different world. But what I would say is if you're thinking of buying a home, meet with your lender, get pre-approved, fill out an application, know that you're going to be asked to provide supporting documentation, okay? One of the good things today is we will just do a soft pull. Every lender does a soft pull now on your credit report. If you have too many hard credit inquiries, it'll drive down your credit score. So we just do a soft pull on the credit. You find out what you're qualified for. You get pre-approved. One of the things that is very unique to certain lenders and to us as well is that we have a program, for example, that I'm going to tell it on this podcast.
Oh yeah, please. That's why you're here.
So we have a unique program, okay, that no other lender has. It's called NAF Cash. One of the things in this market is that we're seeing, and I see stats all over the place, but the percentage of cash transactions is at an all-time high right now. And now if you're going up and you're writing up a loan, an offer, and you have financing on that offer, and you have another offer that has cash, 100% cash, which offer are you going to take? You're going to take the cash offer all day long if the prices are within each other.
Sure.
Okay? Some cash buyers are lowballing. Well, I'm cash, So we have a program to offset that. It's called NAF Cash. And what that is this. You come to us, and if you have equity in your current home, okay, if you have 30% equity, by the way, this is not for the first-time home buyer with 5% down.
Okay.
This is for somebody who says, hey, we're in a pretty good position. We've got good savings. We've got equity in our home. We want to go buy that home over there. We certainly don't have $600,000 cash or $700,000 or $800,000. Our money's tied up in our current home, but we don't have the ability to borrow 100% of the equity in our home. Nobody's going to lend that. So we just have to kind of sit here in purgatory and wait. So what NAV Cash does is this. We come to you, Chuck, you're going to be the person, okay? You got that home, your home, you have decent amount of equity. We are going to say, Chuck, you know what? We're going to buy the home for you. We're going to be the buyer. We're going to make the offer as the buyer, NAV Cash LLC. We're going to show the seller proof of funds. We're going to present them with a statement from our company that shows $3 million in that account, $4 million, whatever we need to. And then we're going to buy the home. And then you're going to move into the home. And you're going to then pay a fee of 1.65%. So if it's a $500,000 home, there's going to be a $9,000 fee for this service. Okay. You're also going to pay rent for the month or two while you sell your home. Okay. So think about it. We bought the home for you and you won the home because you were paying cash. Okay. Now you move into the home. Now that you're in the home, you put a for sale sign on your current home. Your home sells. You close 30 days later. Now we're going to sell the home back to you. You can roll that fee of $9,000 into the sale price back to you. So we're going to sell you the home back for $509,000. You've got your $150,000 or $175,000 equity from the sale of your current home, and we're going to get you into a $300,000, $325,000 mortgage. And now we're able to buy the home you wanted. You competed with cash offers. You won the bid. You sold your home. And now you're living in your new home. And that's what NAV Cash does. And no other lender in the United States has this program whatsoever. I hear a lot of agents, people say, oh, yeah, our mortgage lender offered that. It's a bridge loan. This is not a bridge loan. Bridge loans mean financing. Or I heard someone say, oh, I heard that. They don't count the current mortgage payment against. No. Nobody has this program. And that's kind of my billboard moment here. NAV Cash. It's fantastic. And it's something that I'm running with very hard. And I'm holding a large event at the end of September in our marketplace and having a bunch of agents come.
So since you've rolled that out, your company, have you had success with it?
Yeah. So we have done, the number changes, and I would have to, look up, but we rolled it out in early 2023.
Okay.
And we have bought, I think now we're almost at over 3,000 homes.
That's fantastic. That's
awesome.
awesome.
A big number. It really is. How long is this going to be a relevant product? I think it's going to be till that inventory. Remember, we started this podcast talking about 5 million homes in 2029. I think when rates drop, this product's going to become even more relevant, because when you're talking about 5.75% interest rates, the frenzy's going to start.
Well, the floodgates are open. Now you have competition.
Right.
Now if someone comes, like you said, they could come with a good cash offer.
That's right.
I mean, they're going to win.
That's right. And when you think about it, statistics have shown is that cash offers are actually able to purchase the home at 11% less than those with a financing contingency. So that 1.65% that you have to pay as a fee is actually nominal when you consider your negotiating power when making a cash offer.
That's powerful.
It's a powerful product.
Yeah,
it really is. And I'm just getting it into our marketplace. So it's exciting. It really is to have a unique product.
So just to make a clarification here. So this is more geared towards not a first-time buyer.
It's not a first-time home buyer product.
Now, if a first-time home buyer can come to the table with cash, is that something that, like you had said earlier?
I have no use for those people.
No,
Chuck. They don't need a mortgage. But
if let's say they have to finance $300,000,
a first-time home buyer. Well, I mean, listen, the average that I see first-time home buyers put for down payment is about 10%.
10%.
Yeah, very common. But what they can do to compete is get fully underwritten by us. Okay, what does that mean? That means they literally provide us with their bank statements, their W-2s, their pay stubs, their driver's license, a hair sample, a blood sample. They give us everything that we need, okay? And we put it in front of our underwriter. The underwriter underwrites it fully, as though they were actually physically buying a home. And then we give them a commitment letter that says all you have to do is get homeowners insurance and an appraisal, and you can close on that home quickly. Or if you don't want to close quickly, you could tell the seller that you'll be fully cleared to close within 7 days.
Right.
Okay, maybe even less. Okay. That is what, if I was a first-time home buyer, or if I was a real estate agent representing a first-time home buyer, I'd say don't get pre-approved, get fully underwritten. Get that power behind you, get fully underwritten, so we can make an offer that says you'll be cleared to close. Because if I'm a seller and I'm looking at two offers and one says, this one needs 21 days, and they'll let us know that they're all good to go on the purchase of my home. Oh, look at this one here. They're working with Larry Steinway from New American Funding, one of the world's greatest lenders. And they will say, wow, this offer says 7 days. And now you're talking about maybe this offer is $5,000 less than this offer. Do I want to lie awake for 21 nights hoping that this person's mortgage gets approved? Or do I want to wait just 7 days?
Yeah.
So getting fully underwritten by your lender is so much more of a value proposition than just getting generically pre-approved.
So when they get fully underwritten, one of the things that just came to my mind is they found that property, they worked with an agent, they're fully underwritten on that property. What happens if they can't sell their property? They've been fully underwritten. Is that something you guys take into consideration?
Absolutely. So we let them know. I mean, that's what a good loan officer does. He or she would say, you have to sell to qualify, or you need a co-signer to help you offset that. Okay. Or you qualify without the sale. You're okay. And that's obviously someone has to sell, not first-time home buyer.
Sure.
But it's just case by case. Some people, we say you have to sell to qualify, and they roll the dice. They roll the dice a little bit. It's pretty scary. I would say if anyone's planning on doing that, have a backup plan. Have a family member, have someone who's willing to cover have a contingency plan for yourself. And so if you make that aggressive offer and you don't sell your home, you better have a plan.
Yeah.
Okay. You could really get stung, because I saw an offer the other day. They said, well, we'll just say we'll put $5,000 down as earnest money. And if it all doesn't come together, earnest money, by the way, is security deposit to buy that home. If the deal doesn't go through, we'll just lose our $5,000. Actually, you could be sued for more than that.
Yeah.
Okay, because you can be sued for 2-3 times more. Failure to perform. I'm not an attorney, but you could get into a lot of financial legal issues if you just say, keep the money and we're not buying the home. Sorry, it didn't happen. There's more to that.
Right, and I'm glad you said that. I've heard that. We've done inspections where, again, we get that, hey, we're buying this house, yet we haven't even sold our house yet. And obviously that's information that doesn't reflect how I do an inspection, but I always wonder to myself, holy shit, I mean, you're taking a huge risk here.
Yeah.
I don't know what their background is, right? So thank you for making that clarification. So Larry, thank you, man. This was very informative. I appreciate you coming in.
Thank you.
Again, if you can just tell our audience one more time who you are and what makes you what makes you fantastic?
What I do is I work for New American Funding. I'm the Vice President, Area Sales Manager. New American Funding is one of the top 10 lenders in the United States. I'm up here in the North Shore. I'm in Chicago. I'm everywhere. We lend in all 50 states. This has been great. I've known your company for many, many years. You guys are terrific. Your partners are terrific. And I'm very, very appreciative that you invited me here today.
Thank you. So with all the information Larry shared today, I just want to leave you with the ending that I always end on my podcast. Remember, it's better to be proactive than reactive. Thanks for listening, and I'll see you soon.
Thank you again for tuning in to Real Inspection Services Podcast. If you have any questions regarding your home or our services, please reach out to us at realinspectionservices.com. If you would like us to answer any of your questions on the podcast, send us a DM on Instagram at Real Inspection Services. All info is down below in the show notes.